objectively, these things are growing, a bit like a a bit like a virus. They're like just popping up everywhere. So what's the read of the land?
So for Mixue, there is 46 to 47,000 stores, right? In China and over the world.
Brands around the world
the
now.
biggest F&B brand. They have more outlets than McDonald's. So while you're right to say that drinks localized, but sugar is not localized. Everybody loves sugar. So if you ask yourself, who is really selling sugar, you actually have your answer. If I can put it to just a keyword, what they're selling, right? Mixue is selling affordability. Luckin is selling convenience. Chagee is selling atas. So they are targeting very different things.
Hey Coconuts, I'm sure you're familiar with our friends World First. World First is an all-in-one business account that fuels your business growth worldwide. And yes, they have been fueling TFC. I've used it myself. So World First have allowed me to open up a multi-currency account at zero cost and no fees and no minimum balance needed. So they have a new product which I'll share with you more later in the podcast. Meanwhile, if you want to check them out, link is in the description below. And yeah, welcome back to the show. Let's roll. Welcome back to Chills with TFC. I'm your host Reggie, aka your Chief Financial Coconut, and today we are going to talk about recently quite hot and exciting topics, which is all these big Chinese beverage companies getting listed in the market. Everything from Mixue to Luckin to Chagee is like, what's going on, right? And what is the investment opportunity? Is it a hype train that you should hop on, or is there long-term kind of business, value that we can ride alongside? So that's the question today, and I'm very glad to be joined in studio with Kok Hao and Willie. For our audience that don't know you, would you like to introduce yourself?
My name is Kok Hao. I'm an entrepreneur. I'm also an affiliate lecturer with SMU, as well as for a Chinese private education provider.
And a very prolific writer on SAMP, CNA, all the big things. And that's why I asked him on, because he has a lot of things to say about some of these companies, and the broad trends, China markets in general, and some of these business structures highlight these things, right? And of course, a great friend of the show, Willie. For audience that don't know you, you want to introduce yourself?
My name is Willie Keng. I'm the writer and founder of a financial blog called dividendtitan.com. So I write about US, China, Hong Kong, and Singapore dividend stocks. I've been writing about for the last 5 years. So we have about roughly 30,000 readers reading my blog every month. And, I'm glad to be back on the show, Reggie. Thanks so much for inviting.
No, you're doing great, really. Broadly speaking, we will focus on the three major beverage IPOs, which essentially is Luckin, Mixue, and Chagee from China in recent times. Okay, I'm sure there will be others, they're not within our consideration, but we use them as a basis to discuss, okay, what's going on and the broad idea. So maybe for a start, Kong, you can help us get a lay of the land, right? Like what's going on with all these big beverage companies, because most of us are just consumers, right? And potential investors, right? So objectively, these things are growing, a bit like a a bit like a virus, right? They're like just popping up everywhere. So what's the read of the land?
Maybe I'll just lay out the background and some of the stats around some of this company, and also slightly explain the differences between all three of them. Sure. And I think today, for the sake of summarizing it into stereotypes, I'll actually focus on Chagee, Mixue, and Luckin Coffee, because they occupy different brand positioning as well. So for Mixue, there is 46 to 47,000 stores, right? In China and over the world.
Brands
they
around
are
the world
the
now.
biggest F&B brand. They have more outlets than McDonald's. For Luckin Coffee, it's somewhere around 23,000. As of end of December. They are always growing, so by now it could have been quite different. As for Chagee, I think their numbers stands around 6,400 with about 20 overseas as of end of last year. But again, they are opening very quickly, and I think there were reports saying that by Jan 27, they will open 18 in Singapore. So again, in terms of numbers, they're quite different. In terms of positioning, is also quite different. For Chagee, their beverage sells at about 18 to 20 RMB in China. I'm not sure how much they cost in Singapore. Maybe you would frequent them
No, I don't.
as much.
You know.
In Singapore, there isn't that much outlet, but I think in Malaysia, they had a lot more. Luckin, I think the cost in China is about 12 to 13 RMB per cup. For Mixue,
It's a daily 990 promo for the early.
you mean in Singapore?
In Luckin, for the Luckin coffee in China, once you download the app. So this is, I think, a big part of the discussion, which is how they develop your consumer behavior very seriously. Once I download the app, the first cup of coffee is about 99 cents. Then the next week or two, right, every day is 990. It's like 990 Americano, let's go, right? And it's renminbi. So at some point, it becomes like what's happening? What's on the app now? What's next, right? So that kind of consumer habit is really developed, when I stayed there. The only time it breaks is when I leave.
Yeah.
So it's very, very interesting.
And I think for Mixue, the average cup is 5 to 6 RMB. So again, they occupy very different positioning. And the store format, the kind of things they have in the store is also vastly different. Take, for example, Luckin Coffee. They have 23,000 stores. Almost every corner they have it. Their store format are very simple. They don't have much sitting area. Usually 2 tables is the max you get in a Luckin outlet. It's mainly serves takeaway or even delivery in China, which is a big thing. For Chagee, it's not. It tends to be a lot more grander. On the other extreme end, Starbucks, which is you might even have 2 levels, 2 stories. So that's the difference. And for Mixue, it's really, most of the time, it's really just a counter.
Yeah.
So you can see the different format they occupy, the different pricing and positioning they occupy. And even in terms of gift with purchase, promotion, it's very different. For Chagee, they have very, very elaborate gifts. In China, they collaborate with Forbidden City, collaborate with the Van Gogh. So they have very, very elaborate gifts. They use blind box, which is a big thing in China. For Luckin, they do have some collaboration, but it's not as elaborate. And then Mixue, you don't really have that. It's
no budget.
Yeah. And they don't have endorsement as well. For endorsement, you can see Chagee have Zheng Qingwen, which is the tennis player, right? Recently, Wang Hedi, which is also very big among the youngsters. Luckin Coffee, Liu Yifei, which I'm sure you're probably very familiar. Yeah. They work with Black Myth Wukong as well for collaborations. So again, and of course, Mixue is the big giant snowman.
Yeah. Fair. So I think the idea here is everybody is occupying a different lane, but objectively, they have all dominated their lane.
Yes.
A few years ago, there were other competitors, like when I was in Shenzhen, there were like all these other different brands, Mellower Coffee, they're still around, as with many other brands that are not the dominant players, right? But these 3 has essentially consolidated their category. And I mean, there are always copycats. Copycats are coming in, like I think Mixue was trying to like compete with Mixue, right? And even Starbucks for a period of time tried to compete with Luckin, but I think they pulled out from the market in China, at least in that format, and Chagee has other competitors. It's a very interesting development over the course of the past 5-10 years, and now you see these players and they are listed, and now with that more capital, they're going to do so much more, right? But what is your read really on these 3 brands and the overall, consumer beverage market in China?
I think I've got to agree with Kong about this, right? If you look at how the 3 brands are, China is 1.3 billion population. It's the world's 2nd largest economy. And to be able to compete in China itself, the domestic market, you really have to be at the top of your A game. I personally don't think that the idea of total addressable market works in China. Why? Because each segment, even within the F&B sector, or you're talking about F&B area here, like some of these drinks, you can't really dominate the entire market. You have to actually niche. And I fully agree here. If you look at Luckin, Chagee, and Mixue, Luckin they're talking about efficiency, productivity. I want to get coffee straight away and then I take and go. You look at Mixue, I want something cheap. I want something affordable. So somewhat more of an affordable luxury kind of approach. And that's where they are really focused on. That's why you can find like really cheap bubble tea, for instance, ice cream cone, so on and so forth. And then lastly, Chagee, if you see the way they position themselves, they are looking for more upmarket, premiumized kind of drinks. So they are targeting very niche segment. And I think this is the way the Chinese market is being played, because market is so big, you can't just throw a net and target everyone. So in this day and age, I think it's more on like trying to focus down on that. And coming from an investor point of view, if I will be looking at Chinese companies or Chinese businesses, that's my first step going down the rabbit hole. What is the big question I'll ask myself is, instead of attacking the total addressable market, which is very common for consultants, private equity businesses, venture capital, I'll ask myself, what sort of differentiation and what sort of niche are they really attacking? And then I go down from there. So that's how I see the market today.
Essentially, they all have their own niche. I think our audience as consumers, I'm sure everybody tried these few brands. They've already left China and all over the world, especially in this part of the world. So people have a general sense. But how would you evaluate them as a business? Is it similar to how we usually evaluate like restaurants, quick service, like Starbucks? And because they are the standard things to look out for, same store sales margins, those things, right? So like, how would you evaluate specifically these three brands, and are there certain parameters to look out for?
Apart from the traditional approach of looking, the financial ratios, where you're looking at your revenues, your net profits, your free cash flow, looking at the same store sales, like what Reggie you have mentioned, I think a lot of it also comes down to the ability to scale efficiently. So profit margins are something which I look very, very closely at. Number one, F&B sector in China, if you look from an analyst point of view, razor thin margins, very difficult to compete with. So I want to look at whether the profit margins of these businesses, especially from the prospectuses, I will look at them whether they are able to maintain their gross margins and their net margins year on year. If they're able to maintain their steady margins and even grow it, I think this is something which is interesting, because more often than not, if you notice for these three players, right, they are in what I call a growth stage. So they're growing fast. Sometimes you might not see an economic moat which appears yet. So this can be quite tricky, because people might think that they might be growing fast and they have very good margins, but they miss the idea that they're just in a growth stage. So what happens if things start to slow down? If things start to slow down, that's where the real challenge is. Are they able to maintain that margins? So that's where I would focus my attention on. And on top of that, also looking at the geography of this entire sector. China is huge. You have multiple tier cities, right from your tier 1, tier 3, and then you have 4 and 5. Where are they actually positioning themselves in terms of their stores? And like what you've mentioned, you have tens of thousands of stores. Where are they located? And you can get a sense, if you start reading the prospectuses, the industry outlook in the prospectus page, you can understand roughly where their product differentiation or their differentiation is. So it's more of the quality than the quantity factor of this quantitative factors which I'm looking at.
It's interesting you mentioned about this location. So I think there are also things that you can't really find from prospectus. You really got to visit the ground. So if you go to China, Chagee actually occupies some of the biggest mall, the top malls.
Prime real estate.
Very prime real estate, where the rental is actually very expensive.
Or the mouth of the walking street, like the tourist street, right? They will be there. Yeah, and then like Mixue will be at the back.
Mixue tends to be in Chinese they call it 农村包围城市. So they are always in the third tier mall, third tier cities. In the first tier one, they'll always be not very obvious location. Like in Singapore, you have it in Clementi Granto Mall, which is nobody even know where is it, right?
No, but you will walk there for it, right?
Yeah.
That's the thing. Reading some of these prospectus, right? Did any particular things stand out for you, across the different brands?
So if you look at all three, right, I think what really stands out among all the three is actually Mixue and their operating model. So it's a bit different from, let's say, Luckin. So Luckin has a somewhat closer match of Starbucks, where they do a mix of operator-led malls. That means they operate themselves, and then they also have a partnership stores, which they probably get people to buy into their stores or lead as a franchise. Mixue actually is pretty interesting, because if we realize they have been a fairly profitable business when they listed themselves, this was despite the fact that they have much lower average selling prices. Because typically, if you look at stores, they tend to have very high operating costs. But yet, Mixue, is still a very decent business. And the reason why is because their business model targets the franchisees rather than the end consumers. So this means they are able to scale up and grow very, very quickly. You just notice in their financial statements, most of their revenues are actually sold to franchisees. So it's a very franchisee-led model. Now, if you give one example, McDonald's is slightly more than half franchisee, and then smaller portions is operating an operator-led model. And McDonald's did come out and say that they are trying to shift towards a franchise model because they can reduce the operating costs, they can increase their margins. Mixue, right from the start, I think what they're very good at is they have identified all these different operating models in the US over the last few decades. And they have come out with a model where they say, okay, instead of selling to the end consumers who will consume our beverages, I'm going to just sell to the franchisees. So the marketing, the approach they do is actually targeted more at the franchise. And I think this is what really stands out for Mixue. The focus here is a bit different as compared to Chagee and Luckin. Of course, if you see Chagee, the way they position themselves from the prospectus, I think it's a very clear-cut way of looking at the Starbucks model where they're looking at more premium kind of drinks. The margins tend to be slightly higher, and that's where the focus is when you look at their prospectus.
I think he's absolutely right. So for Luckin, their revenue is 35 billion renminbi. And they only have 24,000 stores. Not only, they have 24,000 stores. And you compare, Mixue is about 48,000. But their revenue is also about 20 over billion. So you can see the difference. What Luckin reports is basically revenue, which is basically the sales of the cups. But what Mixue reports is basically what they sell to the franchisee. So they sell about 9 billion cups a year. And out of this 9 billion cups, each cup is about $6. So it's about 15 billion. But what happens is, what you see in the end is that the report, the prospectus that they have, is actually shows the revenue that they sell to the franchisee and not to the end consumers. Whereas in a lot of the prospectus of the other players, what you see in the revenue is the total sales of the cups.
And I think this is a tricky thing here because as investors, right, you want to understand whether the products which you sell has some form of addiction with the consumers, right? You want a business where you know that the consumers will come back, over and over again, right? So if you're looking at Mixue's model, I think what I find it sometimes difficult to understand is, okay, it seems like there's actually two different segments here. Number one, you want to make sure that the customers like your drinks. They like your pricing, your product mix, so on and so forth. So that's one you have to focus on. On the other hand, you also have to think about your own revenue model. When you're selling your franchises to make money, like what you have mentioned, can I actually still appeal to these franchisees who take on my licenses? So that's another customers which I need to think about. When I started off as an analyst, the first question I was taught in finance is, where's the source of money? Where's the source of revenue really coming from? So is it going to be coming from the end consumers, in this case, for Mixue, or is it going to be coming from the franchisees? Because if that's the case, then Mixue actually struggles with two different customer segments here, which they need to fulfill.
The way I look at it is actually a healthier model, because you have to understand China is a very, very big market. So what happens is you need to allow the franchisee to actually adjust it according to what they think is right. It's a decentralized model if you think of it. So basically what Mixue does is, every franchisee will do whatever is required. They'll buy the right amount of syrup, whatever, and adjust accordingly the different tastes and preferences. And if you look at it, if Mixue can still make over 10% profit based on what they sell to franchisee versus, say, 10% based on what is sold at the much higher value to the consumers, then it is a much healthier model because the franchisees still have margins to make. That is how I see it.
Okay, interesting. So what makes this a good franchise? Because now we realize that, okay, even amongst the brands that we've highlighted, there is and to be fair, it's not new. These are HO kind of F&B chain business models, right? One directly operated, one franchise operated. So what makes Mixue's franchise so powerful, because there are so many franchises. I go to a franchise fair, there's so many. Why the Mixue franchise, in itself is moving so well from your read?
I think I would fall back on the McDonald's model. If you see the products itself, McDonald's doesn't really produce the best hamburgers out there. If you eat their burgers, it's normal, right? And it's not hot or it's just a simple cheeseburger. But yet they have been selling this, year after year. So product taste isn't really the most important for Mixue, and I don't think that's where the true focus is. And I think they're really smart to focus not on that. That's why they're able to price everything cheap and low, because they know that they might not have the best quality. I think where Mixue really stands out, and like what you've mentioned on the decentralized model, is they have a very strong system. So the backend system probably is very strong. The way they actually systemize their stores, who they right down from the training, opening up the stores, where they are strategically located, because it's not easy, right? Like Chagee, you might put your stores easily in shopping malls. For Mixue, where are you going to put it? It has to be somewhere where, quote unquote, it could be a heartland area in China. Like if you see Singapore, right, Mixue is probably not found in any of the shopping malls.
You cannot tahan the rent.
Usually
Yeah.
it's in the heartland areas.
Yeah.
So you're talking about under the HDB estates, for instance. And there are actually a couple of few here. And they're targeting people like your students, for instance. So you can't really put in the shopping mall. So I think the way they focus on, I think it's the system which they have. Number one, they have a pretty good way of identifying the location where they want to locate at, away from their competitors. They probably have a very strong supply chain model, being able to source their raw materials. The input cost is actually very, very low in order to do this. Because in order to appeal to franchisees, first of all, they need to actually appeal to the franchisees, telling them that, hey, the operating cost or the startup capital for Mixue is actually low. And that is something which has to be a very strong selling point.
Okay, let's talk a little bit about supply chain, right? Because China is quite crazy with this, right? I remember 8-9 years ago when I was there, thinking of whether I want to stay there, Yunnan had no coffee plantation. Okay, now the Yunnan coffee plantation is like huge, and I do believe it's driven by this mega trend, right? So with this mega coffee drinking trend, then you need a steady supply to keep up with the growth, right? So then you start to see a whole supply chain get built up, next to the pu'er tea, right? So that's like a very interesting phenomenon when I look at some of this business growth, right? Because it's not just about what is at the top. The supply chain at the back is so crucial in scaling something like that. What is your read on the supply chains of some of these companies? How good are they doing? Because if they don't deal this properly, it may curtail their growth some point. 1 or 2 quarters of these problems could spell a downfall of a brand. I mean, we've seen multiple companies that were growing really fast, but supply chain didn't keep up. Then a competitor comes in and scoop up the whole thing, and they never get to come back ever. So any thoughts on supply chain?
So for these 3 coffee makers, if you compare to the global brands, typically global brands tend to outsource their supply chain to a third party. Luckin, I believe they have their own supply chain back end. So they do own the back end supply chain. Same goes with Mixue as well. And I think
same goes with Chagee.
Yeah, this gives you full control. Number 1, supply chain. Number 2, efficiency. And then you can control your costs better. And I think for me, this works really well, especially if your whole revenue model is in the backyard. You're just selling to customers in China itself. So that's helpful. And on top of that, if you have tariff, you have the trade war coming, I don't think they will be affected. Factories or supply chain can be somewhere in Yunnan. It can be further out in the west, which is much cheaper. And, China has a very strong logistics system. So that makes it pretty easy to control the cost in terms of transport, in terms of labor. And after the day, if you look at how the raw material is, right, this is basically a tea drink with milk. So you don't really have very expensive input cost. And I think this is where if you can control something which is mass market in raw materials, I think what's important is if you can control that cost itself, I think you have that winning advantage. It's a lot like, you're comparing yourself to a Costco or Walmart. They sell things which are they are just daily essentials, but they're able to control their costs so low that they can actually squeeze a profit margin out of it. And they can be thriving, year after year.
I'll probably zoom out a little bit because I know that, for example, Mixue actually uses quite a bit of China-listed suppliers for fruits, for syrup, for many other things. But I would like to actually zoom out a little bit to actually share. If you look at Luckin is predominantly coffee-driven. They do have other drinks. Mixue actually does all kinds of drinks, all kinds of fruits. Chagee does tea. But they do have all kinds of tea as well. So from a risk perspective, I would say that perhaps Luckin is the most risky because if anything happens to coffee, they will get hit. Whereas for the other two, if something happens to kiwi fruits or lemon or whatever, there's plenty of different things, variations or tastes, cups to actually divert your supply chain to.
Hey coconuts, I'm very excited to introduce you to the latest offerings from World First. World First is an all-in-one business account that fuels your business worldwide. Their latest product, the World Card, is a multi-currency business card that allows you to get unlimited 1.2% cashback on all your business spend. If you use it on Meta Ads, Google Ads, ChatGPT, Salesforce, and more, you get additional benefits. Of course, subjected to change, terms and conditions apply. But more importantly, if today you are looking to start your business, whether it's in retail, e-commerce, or B2C, World First is your partner. Check them out, link in the description below, and back to the show. Okay, fair. Talking about this, right? I have a slightly different view. Not that I'm going against you, but I have a question around product growth, right? And how are they going to grow what we call same ticket sales, right? Like how to grow the ticket volume to be higher. Luckin tried, and I was very annoyed. Because they try to sell all the desserts, all those other things to add on in checkout, right? You want to add this, add that. It's not nice. It's not, the feeling is not good. They're trying to compete at a certain level of cost, and that's not what I go to Luckin for. I want to hear, how do you all see their product development? How does it look like at this point? Like if there isn't, you can always just say there isn't. How does it look like in terms of their efforts to grow per basket sale? Any thoughts on those fronts?
Personally, I think this is a very individual thing. It's a very taste thing. I mean, for food, I would think that these are all peripherals. I mean, ideally for a company, Luckin or Chagee, all these food are more or less peripheral. But for drinks, who they're targeting is really the young people who are a lot more adaptable to all this small change in taste. And in fact, simply because some people actually don't drink coffee. So if you look at it from different angle, what they're trying to do is they're pulling people who drink juices to drink coffee rather than trying to change your coffee drinker into a mix or a juice drinker.
Okay, I'm not so sure about that. I'm not sure if people think I'm a juice drinker, then let me try it with an espresso shot. I'm not sure about it. But either way, they are successful in developing those product line. Any thoughts?
Yeah, I think it's very interesting. Just to follow up from your point, right? Luckin they do experiment with different product mixes, and you can see that's what Starbucks also tried to do, a couple of years ago, and right now they are trying to sort of hive that off. Luckin, if you see last year they did the multi mixed with latte, so I think that was something very unique. But I think what Luckin is doing is they are trying to appeal to the white collars who are willing to spend a bit of money to try different things, and they are people who have that innovative and creative mindset kind of customers. I want to try this coffee mixed with juice or coffee mixed with alcohol. I think this is something which Luckin tries to do. I think in terms of product mixes, if you see the products which they are trying to do, coffee is still coffee, tea is still tea, but what they're trying to do is they're trying to open up that mix and variety. And it will happen for some of these very commoditized products. It's not just coffee or drinks, right? If you look at pizza, for instance, Domino's pizza, where they don't just have, your Hawaiian, the much controversial Hawaiian kind of pizzas, but they do have things which are more suited for the locals, right? Commodity products, at the end of the day, you want to actually experiment with this. Why? Because you need to have a core product, and also at the same time, you need to have flavors of the month, trends. And I think this comes very close in line with the business which they're operating, especially when you're selling something which can be, pretty much a trivial kind of product where it can be highly competed away in a very competitive environment in China.
Is there a red flag here if, let's say, the product mix get too far from their core competency, right? So let's say today suddenly there's a cake shelf in Luckin, and then they start to become like a Starbucks, right? Don't just do coffee, they also do the dessert side of things, right? So would that be a red flag for you as an investor?
Yeah, I mean, certainly. And if you can see, that's what Starbucks unintentionally fell into, where they've overexpanded all their different product mixes for coffee. You can see even for apparel company, luxury companies at one point, for instance, Coach, they expanded into the mass market and found themselves deep in trouble when they started to cut prices. It's really, following the law of capitalism when it comes to products, right? If you overextend yourself too much, you might lose your niche or your competitive advantage. And coming back to the initial point where we are talking about niches and the focus, where you have mentioned like each of these three beverages are different in their own ways, as long as they can stay in their own lane and not diverge too much from the norm, I think they should be okay in the long run.
So as an investor at this point in time, it will be a red flag. You don't want to see them go too far off their niche.
I think it's okay to have a
Play
few,
around, okay.
It's okay to try out these products, but it cannot be the core revenues. At the end of the day, they still have to stick to, their bread and butter or
Fair.
whatever core products which they're selling.
To be fair, that is not in the prospectus. They are not trying to say, we're going to open up management never say, we're going to open a whole new category. No, there's none of that. I just want to be clear with all of you, because there is a general tendency for a lot of these brands that are doing very well in their core product to accidentally or, too aggressively quickly expand into other verticals and then cause their downfall, right? So I think there's the element that I think we should all highlight, especially in consumer brands, like this.
If let's say as an investor or as an analyst, I think one way to observe this is actually reading some of the management transcripts. When they're talking about, expanding and they're trying to go into new markets, I think it's good to keep a lid on where they're really expanding to and what they're really doing. And sometimes after reading a few of these, sometimes you get that kind of little intuition that, hey, is there something wrong or is there something odd if they are expanding elsewhere or something different?
Let's move the conversation further, right? So I think for a lot of these brands that they sell they're essentially selling commodity products, right? But they package it in a brand form, right? So from your read on the situation, how many % of rev should go back to investing in marketing and brand building? And net off everything, right? What is a healthy margin that these companies should hold? Of course, we all don't want to see the margins come down, right? Because, if the net margins come down, you'll be like, oh, this is a problem. Something's going on. But what is a good, as an investor, what is kind of like a good space that you want to see them stay within? And then what is the kind of reinvestment at the top in terms of brand building and all that you would like to see?
Okay, I won't go too deep into financials. I would say that all three companies are, again, vastly different. The top tier, the one that position themselves very highly, obviously you have to spend a lot more on marketing, right? For Mixue, I don't think that a lot needs to be spent on marketing because, again, all this really depends on the kind of positioning you're putting yourself to. And even without spending on marketing and looking at just the distributor level, they're already at more than 10% margin. So it's a extremely healthy profit margin they are earning. Chagee, if I'm not wrong from the prospectus, their margin is about 8%, but that's all right because they are expansion. So again, it also depends on not just what kind of brand positioning, whether you're expanding very aggressively, because if you're expanding very aggressively, a lot of that money will be reinvested into new stores. I would say that this one really, you need to be a bit more experienced to really look at the different models they are, different business phase they are in, to actually determine what is healthy. There isn't a real optimal level, if you ask me.
I think it really depends on the operating model. If you're looking at companies which are selling a more premium product, typically I will look at gross margins where they are at least about 40-50% on the gross margin level. Businesses where they lower selling prices of coffee or products or tea, then I'll expect a lower gross margins. Having said that, I think where the focus is not so much on the size of the profit margins, but whether they're actually able to maintain these margin levels for a long time to come. I think that's what's important. The level or the magnitude of it, I really don't bother too much, because if they're able to maintain that, it shows a sign of stability in the business. It shows that in their own market, they have actually achieved some form of competitive advantage or some form of moat.
Before we go to the exciting question of which one is Willie's favorite, so before we go there, maybe two more questions, right? One is on the tech enablement. I do think the Chinese companies essentially change the way tech is done and, used and experienced, from a consumer level and also from an operational level. The first time I bought a coffee on an app is Luckin's coffee, right? So that really changed everything. And over time, because it has all my data set, right? It will know what I buy, when I consider buying, and then they will send the prompts accordingly. How do you see that as a business impact, or what is the advantage for some of these brands? I don't think Mixue does as much of that. In fact, I think Mixue does not do much of that. But between Chagee and Luckin, they have very refined type of tech ecosystem. Anything to add on that front?
I think a lot of it, they adopt this kind of model and they really improve on it. I mean, I have to fall back on some of these US businesses. If you look at Domino's Pizza, but where they really excel at is actually what you have just mentioned, like what Luckin and what Chagee is actually doing. And that's actually trying to build this customer base where they can identify customers' buying behavior, buying patterns, how often they buy, which stores are doing very well. And they all have this data set which they actually collect. And these are all very, very powerful data which they can actually use, because then they can identify the customer's trend. And that's the reason why companies like Domino's Pizza, for instance, they have actually done very well in terms of their store expansion. I think that's what Luckin is actually trying to do. So if you're talking about technology, user enablement, I think that's one competitive advantage which Chagee and Luckin Coffee has in terms of trying to focus on the customer's data. And I think this is where the trend is going for many of these businesses, because as technology gets easier, you are able to actually use some of these tools to really track many of these customers, right, down to the granular detail on what exactly they're buying, what they're comfortable with, who are their profile. For businesses, if these businesses can really take advantage of that, it's really here to stay, because at the end of the day, F&B businesses, they are hit by very high operating costs and labor costs, right? And one way to really stand out is you have to compete in other ways. And analytics or data is actually one big area, one big tool. And if I were to ask management, I would actually ask them in that direction on how they actually make use of some of these data for themselves.
What I think is interesting is they have not pulled a Starbucks, getting me to top up. They have not pulled that whole let's store some money on the app,
It could be, but that could be one of the strategies in the future.
And then you can create a float and then reinvest it, right? Essentially, that's could potentially play out, but it's not, you don't see it anywhere near. If you think about it, there's so many people using the app, right? There's so many ways you can play around.
These days, a lot of businesses, you are not just selling to the customers, right? A lot of companies these days, they are building ecosystems. So ecosystem/community. I mean, this is something we should have heard for the recent years, right? It doesn't just appeal to services-based business. It also appeals to F&B businesses where you're trying to capture the market. Starbucks launched the Starbucks card. They had the first iteration of an ecosystem, right, with the Starbucks card. I think the next iteration is basically what you have just mentioned, all right? Having an app and trying to get people to be on the app with the points. And from what you said earlier on at the start of the show, you talk about what's next for customers. People are excited to know what's next, and that's what they want to do.
But as with all companies, they have grown to a certain size and they are seeing competition locally. So we've seen this many times. Our management will say internationalization, right? That's our method to the madness. We want to go out of China and expand into other parts of the world. What is your read of the three brands' success in other parts of the world today?
Again, I think you have to look at where they are targeting. For Mixue and Luckin, it's pretty obvious it is Southeast Asia. I think to some lesser extent, Chagee is also targeting Southeast Asia. And if Southeast Asia is the playground they want to go next, you have to ask yourself, what is the affordability of people in these places? Which brand actually would do better, right?
Okay, fair. Any thoughts here? Internationalization.
Beverages tend to be very localized business.
Exactly.
So it appeals to the market which you are in. So it's pretty hard to scale sometimes going overseas. And the reason why is a lot of these brands, they tend to cater to the local taste, and local customer behavior varies from one place to another. I mean, in Singapore, per capita consumption is much higher. We are, we don't mind spending more, let's say on Starbucks or nice luxury coffee. In China, luxury downgrade, people might not want to do it. They might want to spend a lot of money on that, but rather they want to find what's the alternative. So in this case, that's where the three beverages really come in. And that's how I would think. I don't think they might necessarily do very well overseas, but locally, I think, they can fly because they know the customers very well. And, so far they have been expanding their stores. There's long queues in some of their outlets as well. So I think this is one of the hallmark of a growing business and something which could potentially be worth looking at.
That is quite clear. So essentially from your worldview, internationalization is like a tail bet, that it may happen, it's already happening, but it may not be the alpha, right? Like actually further optimization of product and experience and trying to maybe grow ticket, increase same-store sales locally in China. Those will still be your focus when you evaluate these companies. Is that a fair statement?
It's sort of like alcoholic beverages, right? I mean, beers might appeal very well in some markets, but
they struggle to move in another market.
Into other places. It's a very local taste. Like what I've mentioned. And I think this is something which we have to understand when it comes to the F&B business or the beverage business. So having said that, to be able to scale beyond the shores, it must have a very strong branding in the first place. And I think while Chagee, Luckin and Mixue, they have established some form of brand, but this might actually take a while for it to really establish itself.
Maybe I'll offer a little bit of contrarian view. So while you're right to say that drinks are very localized, but sugar is not localized. Everybody loves sugar. So if you ask yourself, who is really selling sugar and more selling sugar than selling other things, you actually have your answer.
Yeah. Your answer very clear already lah. I think by the 30 minute mark, people know what's your favorite brand already.
Yeah, but from a business point of view, I mean, you look at it, they have 46,000 stores worldwide. They already have 1,000 over stores in overseas. And you look at the pace of internationalization of the other brand, it's definitely not as fast. If I can put it to just a keyword, what they're selling, right? Mixue is selling affordability. Luckin is selling convenience. Chagee is selling atas. So they are targeting very different things.
So is it a fair statement to say that amongst the three of them, your favorite company will be Mixue?
For me, definitely.
Okay, great. And just a fun fact, because I'm quite active in the franchising space, I hope to see you at the next franchising licensing fair. We're also doing some in Malaysia, so I will keep you updated. I think it's in September, mid-September. So we'll stay tuned. We'll invite everybody to come for the fair. We're organizing a 3-day live stream, very big, 6x6. We can do a lot of stuff, right? So stay tuned. But the interesting part about Mixue, right, is I've not seen them at any franchising fair. They don't need to go to the fair. They're growing at such a level, and I have friends who say, hey, how about we call them, ask them like, what is the franchise rates? That's how people, walk in to look for them, and they don't need to go out and say, hey, use us, right? So I don't see them anywhere near the expo. They don't even need to go to expo to talk to you and convince you, right? And I think one trick that they use, right, is they bring the upfront cost very low, right, relative to everyone else. Most of your money that you franchise with them goes into the store building,
into the equipment,
the store building, which actually is quite simple, from a outfit standpoint. I mean, we all see Mixue, right? It's quite simple. It's just a few things to open bag, put ice, pour water. It's like very simple outfit. So from a cost structure, it's very low to start, and they make a lot of money from the supply chain because they already sell one level of markup when the Mixue parent company sells to you as a franchisee, right? So it's a very interesting business, and I've not seen them anywhere. So really, everyone wants to know, amongst the three of them, what's your favorite?
Mixue, actually, of all the three. What I've mentioned, yes, sugar, right? People love sugar, and this is something which I've also always talk about when I write my blog, right? Habit-forming products and services. If you notice, for Mixue, they are very similar to Coca-Cola as a business, and Coca-Cola is, sweetened syrup. And what's interesting is Coca-Cola is one of the few businesses which can scale overseas. Why? Not because they have, very tasty Coke, but rather because they have actually systemized their whole business. So a lot like Mixue, what Coca-Cola did was they sell instead to consumers like ourselves, they sell to bottlers, they sell to restaurants. So they are largely B2B. Mixue also has that very similar footstep. So they sell to franchisees, small business operators or small startups or people, mom and pop who wants to actually own a store. So I think that's where it sort of helps in terms of scale. What for me, I don't like about this business is the marketing towards the end consumer is a bit different here. So I think this is something which I will actually be a bit more careful about when I want to actually look at businesses like this where they could be selling, very strong revenues, but the end customer, I think, is something which we have to think very carefully about. For instance, if you see Coca-Cola, its history, right? They actually went into some trouble for a while trying to work with some of the bottlers and the distribution overseas. So I think the partnerships for some of them, for Coca-Cola, actually struggled for a while before they actually find their footstep. So they actually owned some of these distributors and bottlers for a while. And then after that, they started to spin off many of these businesses because knowing that these are all very high operating cost business. When your model is slightly different, there could be missteps which you might potentially make, especially when it comes to the franchisee model. I mean, what if one day if franchisees realize that, the stores are not as profitable as it would be, then what's going to happen? So I think a lot also lies in the way Mixue must continuously have a very efficient system or operating model so that it continues to appeal to people who want to actually take on the franchise.
At the end of the day, there is a terminal growth rate to these things, right? Same store sales coming down is a very clear signal that it has maxed out its footfall, and then business has to evolve, right? But we're nowhere near there yet. But it's just as with evaluating any other kind of F&B brands, lifestyle consumer brands, and especially in these type of like beverage, quick service restaurants, I think these are all first principles that you all need to know lah, especially when you're looking at investing. Because often we think we like this thing that we can invest in it, right? But actually the business model at the back is quite complicated. So thanks for sharing. Thanks for sharing. I think we had a good chat. By the way, do you know that the Malay Muslim community call it Mixue?
Oh.
Not Mixue. Mixue, yeah. So shout out to all you Mixue friends, I hope at the end of this discussion you realize, actually that is the one that I'm most interested in, and we welcome the CEO next round. Okay, you can come. Yeah. Any last things you want to share with our audience, or where is the best place that they can connect with you? If they would like to further this discussion.
I write on dividendtitan.com. So if you ever like to know about dividend stocks in Singapore, China, Hong Kong, and even in the US, you can check out my website.
I'm writing for China News Asia, South China Morning Post. So you can find my articles every now and then.
Is LinkedIn the best place to connect?
Yes, LinkedIn definitely.
Thank you for your time. With that's all for today. If there are any other interesting stocks that you would like us to discuss, or any other investment vehicles or trends you would like us to discuss, you can put it in the description box below. Whenever possible, we hope to create more content around these categories. So meanwhile, that's it. We'll see you around. Take care. Bye-bye.